So again, we're going to be going over the pair GBPJPY now. So what I'm going to do is first, I'm going to literally remove everything from my chart. Remove all indicators and drawing tools. I right click, go to remove all indicators and drawing tools, and I'm going to start out from scratch. Okay. Now, the first thing that I'm going to do is I'm going to, if anything, find a foundation, right? A foundation of where, you know, price continues to hit over and over and over and over and over again with simple situations, what we call it, okay? So the situations can look different, right? And the situations can look like this. Once this pulls up, if anything, I'll draw it on here. So the situations can look like this. The first situation can be what we call a touch, right? Situation can be a touch. So we have this, right? We have this, and then price literally touches, right? So it could look just like this one, boom, and boom. And if I was to draw a line in between this and this, we'll see that, you know, price will touch, okay? So that's considered a touch, right? Next one will be a gap, okay? So we'll have this, then we'll have this, and there'll be like a gap in between, right? I think it's not really a gap, but it's a gap, right? Push this up a bit and push this down a bit. So the next situation will be like a gap like that, okay? Now, as far as a gap, I'm pretty sure there is one, but I'm not going to, you know, search for it that much. This is definitely a touch right here, and I guess this could be considered an overlap, okay? So the overlap will look like obviously an overlap, okay? So boom, and boom, and price overlaps, as you can see, right? Price overlaps. Okay, so those are the situations that you're looking for. If anything, this would probably overlap a little more. I can be as keen as possible so that you really understand what I'm talking about, okay? So these are the situations: touch, gap, overlap. And you're going to start out in the monthly time frame. And when you start out in the monthly time frame, and by the way, this could be like a gap right here. I mean a overlap. Like this. Okay. So as you can see, price pushed down and price pushed up, right? That's like overlap, okay? So these are the situations that we're looking for, right? So if anything, draw these out on a sheet of paper right now, real quick. And I'm just gonna erase these right now, okay? If anything, if you didn't get it, if anything, you can pause the video and then move on. All right, so that's that. Now, first, you're gonna start on the monthly time frame. You're gonna make sure that your entire chart is shown, okay? And if you want your chart to look clean like this one, I have a video on fxpronow.com, and it's called setting up your charts. It's in the setting up your charts category. If anything, you can find that video, and you can be able to have your you know, your chart look pretty like this one. All right? So you're going to go to where it has the candlesticks, and then you're going to go to line, okay? You're going to go to a line chart. It's just way more fluid, all right? It's way cleaner, right? There's no wicks or anything like that. So you're going to make sure that you see that your entire chart, right? And we're on GJ right now. So, you know, GJ, it moves. It moves, you know, pretty good amount. So what I'm going to do is I'm first going to look for my first situation. I'm going to look for a situation in the market. Now, I already have a drawing tool, right? So this is the drawing tool that I'm using, this horizontal line. You can either find that horizontal line in this area right here. You're going to click on this button that pulls out this thing over here. In the beginning, it's going to start out with a trend line, but you're going to push this to the right, get a horizontal line. Now I've starred the ones that I use the most, and when I start, it goes down here. Okay, so I'm going to go to horizontal line. As you can see, it's highlighted. It's highlighted, right? And I already have a, a template, right? Called monthly key level. Okay, so if anything, this is where I find one of those situations. So I see a gap right here. Now what we're looking for is we're looking for price to really really make a significant move. As you can see, this is a really significant move. This is not as much as a significant move, but I really don't see a lot of a big push. There is a big push up here, but there's no portion at the top creating a support. There's only the resistance portion. Okay, this has support and resistance, so this is good. Okay, right, it has support and resistance, so those are good. All right. Now another portion where I see a good amount of support and resistance is down here, right? But when we're doing when we're doing the monthly and weekly key levels, we want to make sure once we find our foundation, right? Let's write that out. Our foundation cannot be more than like 1,500 pips. It shouldn't be more than 1,000, but just don't stretch it out to more than 1,500 pips. Now, yes, this has the situations that we're looking for, but if I was to look at the difference between this portion and this portion, as we can see, it's way too large. Way too large. Okay, so it doesn't follow our rule. Okay, so this is good. I'm gonna keep this one no matter what. Now I gotta find something in the range of that area so that I can be able to have a true foundation. Now you're gonna find out when I continue that price is literally one of these key levels is going to show up right here, which is good. Okay, or at least near it. All right. So if anything that's close, I guess here, right? If anything, I'll put one here and then I'll show you why. Right? So I see price hit this area, bounce, 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 right? And as far as resistance, right? And resistance here kind of, and then price hits this portion as a support. Okay, so it's not as good as I'm used to or really looking for, but it's as close as I'm gonna get from what I see here. Okay, now if I was to do the difference between this and this, we'll see like just real quick, we'll see that this is 1,700 pips. It's okay. It's not as good as I would like it, but it's okay, right? Because we don't want it to be more than 1,500 pips, but if there's nothing, there's nothing. You know what I mean? Right? So now what I'm going to do is I have this, general sense, but as opposed to having a general sense between the gap between this area and this area, what I'm going to do is I'm literally going to take these numbers right here and come up with an actual value as opposed to just kind of guessing, right? Sticky notes one. I'll use this one. Okay, so now what are these lines used for? These lines are used for it's like a larger form of support and resistance lines that on a smaller time frame, anytime that price will get to these areas, you'll see that price is going to react. Will either bounce off of, consolidate on, or they will head towards. Okay, and you'll realize this over time. Right now, the coolest part about doing the monthly and weekly key levels is the fact that you will not really have to do this too often at all. at all, right? If anything, let me put on the candlesticks and see what it looks like with the candles on it. If anything, I'll probably move them slightly, right? As you can see, price literally wicks in this area over and over and over on the bottom portion, which is better than when it was just candles. But you got to do it on the line chart. So what I did was I wrote down this number right here, right? So so what I'm going to do is I'm going to subtract. I'm going to take this number right here, 195.758, and I'm going to subtract this number right here, 177.431. Okay, and that will equal 95.758 minus 177.431. Right, so that's a difference of an actual total of this, which equals 1832.7 pips. That's the actual. Okay, so that's what the actual amount is. All right, so what I'm going to do is I'm going to write down up here. Okay? I'm going to write down up here monthly is 18.327. Okay, so that's that number. So now what I'm going to do is I'm going to take the monthly, right, foundations range, and now I'm going to create a range on top of it with the same range that we came up with for our foundation to create what we call zone 1, right? So all I did was click this one, copy and paste it, right, to make a new one. Now what I'm going to do is I'm going to take this number right here, 195.758, right, and I'm going to add the monthly range to get some value. Okay, so let's take out handy dandy calculator. All right, so again, we're going to take the top of the monthly's foundation, right? This is the foundation right here that we created from the beginning, this line, which is 195.758, 195.758, plus we'll take the range that we came up with to get a new range in between these two lines. So plus this number, plus 18.327. Okay, so 214, write that down, 14.85. Okay, 214.085. And you see, miraculously, price literally wicks that area. Miraculously. Go figure. All right. And as you can see, price reacts in this area. If I was to put the candles on, you'll see price literally hits that area. It pushes down hard to this monthly key level, pushes up, stops in midair, drops like a freaking hot potato. Pretty interesting. All right. So, line. So now I'm going to click this, copy, paste, and it'll make a new line, right? And then I'm going to change this price to move it to be at the same range as this foundation, and this zone 1, if anything, that's right, call it zone 1. And we're going to make zone 2. Zone 1 and zone 2. Okay, zone 2. All right. Now, what we're going to do is we're going to take that 214 right here, right? We're going to add our monthly that we came up with, right? And then from there, what we're going to do is we're going to get this value right here, okay? So again, we're going to take the 214 that we came up with plus this number right here equals 232.412. And you'll see that price is going to that area miraculously as well. So as we can see, price push down, and let's put on the candle so that you can see it. Price push down, pretty interesting around that area, okay? So now what we're going to do is we're going to come up with a zone 3, and that'll be the last monthly that we'll do heading up. All right, copy, paste, boom, all right. And just so you know, the style, like how I created that line, it's literally just a horizontal line, show price, show text, monthly, right? Text align right, small line, black, and that's how I did it, right? And then from there, what I did was I saved as monthly key level, and then it stays there. So then I don't have to change anything. Okay, so we're going to change the coordinates now. All right. So we're going to take the 232.412 plus our monthly key level. All right. Plus 250.739. 250.739. Wow. As you can see, price wicked that area and then push down. Pretty. So now how we're going to do the bottom zones. We're going to take this number right here, the 177.431, right? We're going to take that, copy, paste, it's a new line. We're going to drag it down here somewhere, right? We're going to take that number right there and subtract our monthly range. So 177.431 minus 18.327. 159.104. 159.104. As you can see, price was hovering on that area, right? Like a lot. So this is a very significant area as price with that area. Strong, man. Like this is a beautiful one. Remember how I said most likely we're going to get a line somewhere in this area, and that's exactly what happened. Pretty interesting, right? All right. So now. Candles. So now what we're going to do is we're going to take that number 159.104 and we're going to subtract our monthly again. Right, and mind you, this is zone 1 again. It should be zone like -1, but I'm not going to say it. All right, zone 1, and we're going to do another zone 2. And we're going to take that line right there, copy paste, and we're just going to drag it down. And we're going to find 159.140 minus 18.327, 140.777. Oh, isn't that freaking crazy? That's exactly the number that we came up with. Anyways, so that's pretty crazy. All right, and as you can see, price is really consolidating hard, and as we can see also, price is about to get to this monthly key level, which is major. Let's go down to the hour time frame. It's not showing as of yet. Let's go down to the H4 time frame. Not showing myself. Take off the auto and see how close it is. It's very close. it is 200 pips to this area right here. When I actually make our buffer, it's going to be about, I'll make like a buffer. It'll be about 120 pips till that area. So I wouldn't be surprised price is really trying to push down to that area right now. I got a good amount of pips on this last night. Nice. Okay. All right, so let's go back to the monthly. All right, so that's zone 2. Let's do zone 3. Zone 3. Boom, boom, boom. Got the base. Push it down. And let's do 140.777 minus 18.327. 122.45. 122.45. And as we can see, price tried to stretch down there. Price tried to get this area. All right, cool. So that's the monthlies. So the monthlies are done, right? And you know, I won't have to do that for another year, or at least 6 months. Right. So now we're going to figure out our weekly. Right. And our weekly is literally going to be just 18.327 divided by 2. So 9.1635. 9.1635. Okay. So all I did was take this number right here and divided it by 2 and got this number. Right. So the first one that we're going to come up with is going to be in our foundation. So what I'm going to do is I'm literally going to go to this line right here. Right. I already have a template for our weekly key level. I'm just going to place it somewhere in the middle right there. As we can see, weekly is going to be on the left side over here. Right. And I'm just going to double click on this area right here. What we'll also see is the fact that how I make my weekly is show price, show text, left, bottom, weekly, bold. Then we're just going to come up with our coordinates. The way that we're going to come up with our coordinates is by taking the bottom of our foundation, right? This first number that we came up with right here, or second, whatever, right? So 1.77431, right? And we're going to add, because it's going to be on top, we're going to add the 9.1635. Now, why is this important? Because the thing is, you're going to realize that when price gets to these areas, you'll just see that it's going to make all the difference. You know, I follow some top traders, and I promise you, this is what they're doing. But they charge an arm and a leg. Wow, this is literally like exactly. Charge an arm and a leg to get this information, and you're getting it for the free. All right, so now you're going to take this weekly right here. You're going to take this weekly, and now you're going to add the monthly, because it's going to literally push the next weekly right in the middle right here. Okay, so it's going to push like right here. All right, so you're going to take this number right here, 186.5. Well, let's get the actual numbers. This one right here, plus the 18.327. 18.327. 204, 92.15. 204, 92.15. So how did I get the weekly? So the way that I did it is you remember how you saw how we got the monthly. The way that we got the monthly was just just taking two lines and creating that, and then we found the range by taking the difference between this number and that number. Right? Came up with this, which is about 1,800 pips. Now, the way that I came up with the weekly, so this is the monthly. The way that I came up with the weekly, I took this number right here, weekly, and all I did was literally divide it by 2. That's it. And it came up to 9.6. Came up to that number, right? So that's how I came up with that. Very, very simple, right? And the reason why I placed my weekly right in the middle, just to throw it in there in the beginning, is because I know that, and let's put back the line chart. So, right, the reason why I put that there is because it's going to be right in the middle right here, right? And as you can see, the weekly that we drew, right, it's right in the middle. Price literally wicked that area, and it pushed down super hard, okay, which is beautiful. All right. Now, what I also see is the fact that this weekly right here, when you push it to get this one at the top, it's the same distance as the monthly, right? So we're going to take that 18.327, right, and add that weekly right here, right, to the 18.327, and then we got that weekly. Now, what are we going to do? We're going to do the same exact thing, copy, paste, right? We're going to take this weekly number that we have, this weekly that we came up with in zone 1, 204.922, which is this number right here, and we're going to add 18.327 to it, right? It's going to be 223.2485. 223.2485. Yeah. Okay. And it pushes it right there. And as we can see, price, like consolidated in that area, price consolidated in that area, and then kept on going. So this is not really like a strong one for now, at least. Right. So now we're going to take this weekly right here, right? Copy paste, and we're going to push this up here, right? And we're going to take that weekly that we just came up with and add our monthly to it, right? Add our monthly to it. Let me know if you guys are following. Right? So now we're going to take that number right there and add 18.327 to it. Okay. So 241 point. Wow, this is literally like to the freaking T. Like, how am I doing that? Exactly. To your question, so you grab the weekly and then you just add in. Excuse me. You grab the weekly and just add the monthly because it's going to literally put it right in the middle. So the only time you actually use the weekly number is when you're doing the foundation. So now I'm going to take that weekly foundation right here, number, copy, paste. Now it's like right here. I'm going to drag it down here. It's going to be somewhere in this area, right? So I'm going to take this weekly foundation number that we got right here, which is 1.86595. 1.8659 is actually 45 minus the monthly. So 682675. 682675. Yeah. Okay. And then push there. As we can see, price literally pretty interesting. Price started in 1993 at that price. Let's even put in the candlesticks to see exactly. Well, around that price. All right. Pretty freaking interesting. Well, price closed at the monthly, the first month of Forex, maybe, I don't know, or of this chart, FXCM, at that price. Pretty interesting. Really, really interesting, actually. Okay. So now, let's go back to line. So we're going to take that weekly right here. Boom, boom. Push this down. and we are going to now, we're going to take that number right there, and we're going to subtract 18.327 from that number, and it's going to be 149.9405. And we'll see that price with this area right here, with this area here, pushed up to this area right here. So it's in between right now. Current price is in between these, this weekly and monthly right here. Okay, so this is a major area to pay attention to. And then the next area is most likely going to be down here as far as where price is going right now. Maybe, maybe. And you're going to see how crazy it's going to be as far as here. Boom. Push this down here, right? We're going to take that number that we just came up with, right? This weekly right here, 149.941 minus 18.327. 131.6135. 131.6135. Okay. So as we can see, price hit that area, which is pretty interesting to the T. So price went from that monthly, push all the way down to that weekly. Just imagine if you got that, you know? All right. So now what I'm going to do is I am going to just pull out my fibs real quick. I'm just going to check and see something right here. Point A, point B. As we can see, price went from point A to point B to 38.2 on the dot, and I wouldn't be surprised price is going to keep on going. If I was to go point A up here, point B down here, price got in between 50 and 61.8. Let's put on the actual candlesticks and let's see if it wicked towards that area. Well, it wicked towards the monthly key level more than it did the actual fibs itself, right? So you always grab the weekly number and add the monthly, exactly, to get the next weekly. That's the simplest way I can really put it, right? So if I was to see something before I even pull out my fibs and stuff like that, I just wanted to pull it out on the line chart just to see what's going on, right? So before I pull out the fibs, let's do this. So let's draw some trend lines real quick, and I'm gonna take off this stuff right here. I'm gonna take off these. I'm actually gonna draw the buffers. I'm gonna draw the buffers just on where price is currently. So price currently is next to a monthly, right? So what I personally do is I'll take that monthly number right here, right? This monthly number right here is 140, and this is optional. You don't have to do this, but I'm very, very detailed on how I do things. So 140.777, and what I'll do is I will make a buffer, right? Letting me know, hey, listen, price is about to get to a monthly before it gets to the monthly, right? And I'll make it where it's going to tell me 50 pips above that area that, hey, listen, it's about to get to a monthly, right? So if anything, as opposed to setting my take profit at the monthly line, I'll set it, at that buffer, right? Or I'll just know, hey, listen, price is about to get to a weekly or monthly. Okay, so I'll only do it for the monthlies because monthlies are a little bit more significant. Okay, so 140.777, right? And I'll add 100 pips and subtract 100 pips from that, right? So how am I going to add 100 pips? I'm literally just going to do the 140.777 plus no, that's 100 pips going on. So the 140.777 plus 0.5 right? The reason why it's 0.5 is going to be 50 on top, 50 on the bottom, so it's a 100 pip buffer, right, on both sides. So it's going to be the 141.277. You can see what I mean. So this is the buffer border, right? So the top portion, and mind you, this is going to stretch. It's stretching out into the future. Now, what's the future? 2030. So this is what I'm saying. You do this one time. I know it's kind of extensive, but you do this one time, you're set, right? So 1.277, right? And then we'll subtract 50 pips from that area. So 140.777, right? But minus now 50 pips from that, right? And you'll see it here. So now when I go to the lower time frame, like the H4, you'll see, hey, listen, price is about to get to this monthly. Do you see it now? Yeah, you're going to be able to get access to this recording. The recording is going to be on my YouTube, and you can be able to subscribe onto the YouTube. Here, this is the YouTube that you will subscribe to. Okay. That's the YouTube link, right? Once I get to 100 subscribers, I can actually have an actual link. So if anything, help me get to 100 subscribers today, so I can have an actual link instead of this jumbo link. Right. So as you can see here, there's an actual buffer saying, "Hey, listen, price is about to get to this area." Right. And believe me, this buffer is well worth it. I put it on every single 380. So I put it on every single. I put it on every single monthly, but for time's sake, I'm not gonna do that right now. All right. So we did on that monthly, and I'm gonna do it on this monthly because price is about to get to that area. So I'll put it over here as well. Okay. So, and I'll change it later on. So that's that. Now I'm gonna draw some trend lines. You guys ready? We'll really get into this. Okay. So now let's draw some trend lines. So I'm just gonna throw out some trend lines, and if something sticks, something sticks. On the monthly time frame, trend lines are not really that important, but you never know. Right? You never know. So trend line on monthly and weekly. Right. So I have a specific trend line for the monthly and weekly. Right. So put this and into the future. And I'm going to do another trend line from point A to point B. And even though it broke past it, I'm just going to, just draw whatever. Okay. So we have that. We have, because you never know, at some point in time, these trend lines may be important. We have this. Why does it? We have this one. And we have one that actually matters now. Point A, point B, and into the future. Point A, point B, into the future. Okay, so now we have that. So that's on the monthly time frame. Okay, if anything, I'll probably make this a little thicker because it is pretty significant, right? But I wouldn't suggest to make too many lines thick because I promise you it'll jumble your charts, and you don't want your charts looking messy. Okay, so the only reason why I did these two is because it actually is significant towards price currently. Okay, that's the only reason. So now I'm going to go to, oh, actually, now we're going to pull out my fibs. I'm actually going to pull out my fibs now. So point A right here, point B right here. If anything, when it looks, how it looks on the line chart. This and because when it's on a higher time frame, you know, fibs acts a little different. So we see a reversal at 38.2. Also, you know, we have this trend line right here, and it's really respecting that area. Okay, so I see price already on the monthly time frame. I see price getting to 140 point, let's say 8, 140.8, which is already a 250. Oh no, 200. It's about 100 and something good drop. Right, so that's where I see. As you can see, you see price heading to that area, down to that area. Okay, so let's go to the weekly time frame. All right, let's go to the weekly time frame. All right, and now that I've drawn some trend lines on the higher time frame, which is like a significant time frame, and I just didn't want it to be too jumbled. Now I can start adding in some indicators. Now, I don't really use indicators too often, but if anything, I'm just gonna start. All right. So, what indicators do I personally use? I use a couple. Right. So the first one that I'm going to add on here is going to be the EMA. Okay. So the EMA is called the moving average exponential. Okay. Now, that's the first one, right? So it's going to be this blue line right here. You can make it whatever color that you want, but I said but if anything, this is a really key indicator because it literally just shows you where price is going. Okay, where it was and where it's going. So what's the specifics on it? As far as the inputs, I put it at 20. Why did I put at 20? I don't know as of yet, but Chris Terry put it on 20. And, you know, like, if he's a multimillionaire, I'm just going to follow. I'm not even going to ask questions. Cool. Now, the cool part about the, and mind you, the style, just regular blue. That's how I have it. All right. The cool part about this right here is you can use it as some sort of support and resistance line that's kind of following where price is going. Okay. Now, the other indicator that I'll add on here, right, is the SMA, right? So the smooth moving average, okay? So this one I got from the first teacher that I got access to, right? And we're going to have that one at length 18, right? So length 18 style, we'll put it as red. And just know when the red is below the blue, it's obviously a downtrend. And when the blue is above the red, it's an uptrend. Anytime that you see a cross, we will take it as if this is like the last confirmation or the last confluence that it's heading in a certain direction. So if the blue crosses the red to go down, it's the last confirmation on a higher time frame. If you see the red cross, if the blue crossing the red, heading down on the weekly, it took a long time to get to that area. So that's why when it comes to indicators, we take it as the last confluence or the last confirmation because it takes a long time for this to form. Okay, so this is just to have like a confidence that, you know, price is going in a certain direction. Okay. Especially with the values being so high at 20 and 18, both. Okay, so I just use this as like a confirmation for myself. Okay, so the next indicator that we're going to, so if the blue is below the red, it's a downtrend. If the blue is above the red, it's an uptrend. Okay, and if they cross, it's a confirmation that this is where it's going. So the next indicator that we're going to add right now is going to be the MACD. So I never really used the MACD when it came to Forex, but when I was actually trading stocks, and I made a pretty good amount of money in stocks when I was in college, I used the MACD, and I don't even know why, but I just typed in, what are good indicators, and MACD popped up first. I started using it, and I kept it on there, and it worked out well for me, right? So when I saw Chris Terry using it, I'm like, oh man, the MACD. I never really thought to use it, but I'm going to use it now. So this is what he called the 310 oscillator, if I'm not mistaken, right? So the specifics on this MACD is you're going to put fast strength 3, slow strength 10, close 16, check this one. Then for style, take off this histogram, right? So you're not going to worry about this one. You're going to put a check on MACD, make this blue, have it a thicker line so you can see it, histogram. Check like a gold color, right? And then line default scale rate, right? And then from there, you'll be able to have this. And all this is going to show you is the momentum of the candles, the momentum of the candle of the trades of the push of the market, right? So this one would be like a step before the EMA crossing and stuff like that. Okay. So as far as this one right here, I haven't gone that far in depth on how this works as of yet, but you can kind of like tell, right? I just mostly focus on market structure. All right. So what we see here is on the weekly now. What I see here is another trend line opportunity that I could be able to draw. All right. And again, we want to make sure that our charts are clean. All right. Very, very key. So now we're here, and I'm going to make it a thinner line because it's not as significant. And if anything, I'm actually going to take off. I'm going to hide this fibs because it's kind of messy. All right, so now I'm going to go point A. I'm going to do point A, point B, and into the future. Point A, point B, and into the future. Right. So we see a channel formed over here. If anything, we'll do over here. Point A, point B, and into the future. Okay. And as we can see here, price formed this channel, right? And if anything, I got to put the fibs back. I don't know how to revive it. Whatever. All right. So let me show you. You're going to see that price pushed up to that area on the fibs. Let's put point A, point B. You're going to see that price pushed up, and it got in between 38.2 and 50%, like in between this monthly and weekly right here, and then from there started to drop, and price pushed up, got to that trend line, and then kept on pushing down, and then as you can see, price pushed down to that trend line. Now I'm doing this, and if anything, it may do the same thing and keep on doing it, right? So let's do another trend line that we see. Point A, point B, into the future. Okay, let's look at this on the day time frame now. Right, if anything, we'll get price and specifics. Right, not really. Right, so this is what it is. Right, point A, point B, into the future. I wouldn't be surprised if price is going to push to this area first before it gets to this monthly, and then from there probably reverse. Okay, so that's what we see. I'm going to do some fib work real quick just to see how the price was reacting as of recently. So let's do from here. So let's point A, high, swing low, right? Point A, point B. You see price gets to this area right here, 38.2, and then from there drops, right? And you see how it says negative 61.8. This is what we call an extension. And what's cool is anytime that price gets to 38.2, you could be able to have your take, and then it reverses. You can have your take profit number 1 be negative 27, take profit number 2, 61.8, and then take profit number 3, whatever area is next, like this one. So take profit 1, take profit 2, take profit 3. So for me, I already hit take profit 1 and take profit 2, right? I already got this whole move. This was 450. Now mine was broken up into sections. I wish I got the entire thing. I didn't get the entire thing. I got like this, and then I got the rest. Right? Last night I got the rest, which is pretty cool. You got that sell, good stuff, bro. Very good stuff. So that's what we see here, right? Now, with this being the last push, right, and we see price really push down hard and price really push down hard again, right? What we're thinking is the fact that price is probably going to do the same small move, okay? So let's take off that fibs, right? Price is probably going to do the same small move and push up, okay? Price is probably going to do the same thing, right, like right there. All right. Let's do it from the bottom. All right, it'll probably do it there. So let's do fib. So point A, point B into the future. And as you can see, what's pretty cool is the fact that it correlates with that 38.2%, which is beautiful. Okay. 38.2, which is beautiful. Make sure I don't miss anything. 38.2, which is beautiful, right? Now, if anything, price may continue, right? Price may continue downwards. Price may continue downwards to this trend line and then push up, right? May continue downward to this trend line and then push up, right? But let's say price stops right now, which would be okay because it really had a good push down, like a really, really good push down. I wish I got the entire thing. I did. But if it doesn't, you know, you could be able to get this push up, right? If you'd like. It's, you know, 170 pips, which is beautiful, right? And what's pretty cool is it's going to do it fast. It's going to do it really, really, really fast. But what we're looking for are a couple things. Number one, you want to make sure that, you know, you see this momentum kind of shift a little bit. That's not number one. Number one is you want to see on the lower time frame, like the M15, you know, price really make a big push up. And then also what you're going to see is you're going to see the EMA and SMA cross. You're also going to see the MACD shift to the upside like it did right here, right? I really do not know if price is ready because it's still pushing down, and I got out of all my trades, and I really wish I stayed to myself or at least kept a position because I got out like here. And it's still pushing out another 60 pips, but it's okay, right? If anything, I'll probably catch the next move on the London session. But this is my analysis right now in GJ. Let's do the overall analysis. What do we believe is going to happen, like long term? So I see price pushing down, pushing up, pushing down, right? Probably making its last push up and then push down. Chris Terry, he explains that you know, price, it does a five moves. It'll price bounce off the channel 5 times. So 1, 2, 3, 4, 5, and then I'm pretty sure it's going to push through it. I'm pretty sure this is the last one. That's number one. And then also when it's in a coil or in a channel, after 75% of that area, it'll most likely break out towards a certain direction. And I know for sure it's not going to push out heading up because it pushed down significantly hard, pushed up to 38.2%, and now it's shifting. It has definitely broken structure on the weekly time frame. This is going to close on Friday very strongly. It may push up for its last push up to 38.2, and then from there significantly drop. And I see it dropping all the way to this trend line right here. If anything, it kind of correlates with this weekly. And remember, this trend line comes from the monthly time frame. That's why it's thick. I see price pushing down through that weekly key level right there, most likely to this trend line, or if anything, bounce on that weekly. I doubt it's that strong, but most likely to that trend line. If anything, probably push down to that monthly time frame. I mean, that monthly key level, and then from there, probably push to this trend line right here. As we can see, you know, price was really pushing down. This is definitely a downtrend hard. And when it pushes down, when it makes that really strong push down, it's going to go fast, right? This push down took how long? 6,000 pips in a year, right? Which is beautiful, right? 6,000 pips in a year, and what's cool is obviously, you know, you're not gonna, you know, you can be in that trade for that long, but you're not really gonna be in that trade for that long. Most likely, what you're going to do is, you know, break it up into sections. But you know, you could keep a small position and just imagine doing a one lot, and that's 6,000, well, close to 7,000 pips, right? If anything, you can, you know, this is what I was also thinking as well. Just imagine getting into a trade at 12 lots, right? And it's a continuation of a trend, 12 lots. And you do that January 1st, and you know for sure a specific trade is going down for a while. You get into 12 lots on that one trade, and then you just, you know, in a big account so that you fluctuate all at once, right? And then what you're going to do is you do this January 1st. February 1st, you withdraw one lot. You just, you know, partial close, one lot. March 1st, you withdraw another lot. Same thing, next month, next month, next month, next month, next month, next month. And then that's how you can pay for your bills. You do one trade for the year. Pretty interesting. You know, I don't know. This is just things I think about. All right, so again, that's where I strongly believe that price is going to just strongly push down. I don't see any buys at all as far as long term. At least I see strong pushes down. And the first push will be to that trend line, about 100 pips. Next push to the monthly time frame, the monthly key level, 200 pips. Next, 1,000 pips. The next one, 1,400 pips. The next one, now obviously there's going to be pushes in between, blah, 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 blah. And I don't know what the future entails, but this is just what I have for now, from what I see. All right, and then from there, we continue, you know, a big push down to the next trend line, which is like 2,000 pips, something like that. I don't know. Obviously, what we have to do is we have to follow the market. I can't just make that assumption, but I just can go based upon what I see. Now, based upon what I've also heard, as far as Stevenson was talking about the fact that with Brexit, the Great British Pound is probably going to gain value because of everything that's going on. I'm not saying gain or lose after that, but if anything, I'm pretty sure that's going to make a significant change. And from a friend of mine that I have in Europe, they explained the fact that everything is going to shift, if I'm not mistaken, 2019 or 2020. One of those, 2021, I have to ask. But obviously, that's a while from now. What we're looking for is to get some money today. And what I see are a push up first, you know, get your pips, and then from there, a push down. But if anything, you first got to wait until you see a significant push up to get into that buy. So I just want to make sure this is one more thing that you can be able to use. There's this thing called market profile. Now, the only way to get market profile is by having a pro account. You have to pay for TradingView, right? I would definitely suggest to do so. If anything, I'll put a link in this thing where you can be able to get TradingView. If I'm not mistaken, you could probably get it for a discount by using my actual link to get TradingView. But the only way to have market profile is by, you know, getting an actual subscription. So make your choice, right? So what you're going to do is going to go to indicators, you're going to go to volume profile, and then from there session volume, right? And it's going to pop up here. Now this is really, really cool what market profile does, and then I'm going to you know, show you the inputs. Input 24, number of rows 24, up down 70, check. Volume profile checked. This blah blah blah, just keep it all the same and just make it stick, right? Yeah, I want it that big, right? Wow. Right, and then what this does, which is really, really cool, and what's interesting is this lines up with this. Pretty interesting. So what this is going to do is it shows you, and you're going to use it on the 30-minute time frame, 30-minute, the most hour time frame, right? So what this is showing you is really, really cool. So it's going to start out, as you can see here, you see how it says 2018, 8/8, August 8th, 000, right? So what it's showing you is at the time that the market opened to the time that the market closed. So you see 2018, 8, the 9th, right? So it shows you the last 24 hours. And then what it also shows you is the volume at which the market had the most volatility in that area, where price really, really spent a lot of time in that specific area. And as you can see, price consolidated at this area. So you see that there's like a flux. And what Chris Ray was talking about is the fact that this is how the market moves, right? The heck? This is how the market moves, right? So let's say this is one day, right? And during that one day, I don't even use drawing tools on here, right? Anyway, I'll do it for you. So during that one day, you see, you're going to see this line right here, okay? You're going to see, so let's say this is a 24-hour period, that time frame, right? During that day, you're going to see like a bell curve form. And what's happening is the market is moving the most during this time frame right here, right? And then what's going to happen is at the specific time where the market moves the most, there's going to be like a red line that pushes out, okay? This market profile, right? And why is that significant? Because that's showing you where price moved the most. What the heck is this? Where price moved the most, or not really moved the most, but where the most volatility, where there's some sort of indecision, or price really, really likes that area, okay? So what this can tell you is, hey, listen, it can tell you where price most likely is going to go, right? So remember how I said, you know, most likely price is going to go to 38.2, which is that green line right there. Push back. 38.2, which is this green line right there, and as you can see, that red line. Pretty interesting that my 38.2 correlates, which is confluence, with this market profile. Pretty interesting. And then also remember, we got this line from this. The same push right here is the same push right here. These are three confirmations. Three confirmations. Number one, the stretch of that line. Number two, point A, point B, point C, 38.2. Also, third confirmation or confluence is this market profile right here. The fact that price really struggled during this area. I wouldn't be surprised price is going to really push it into this area right here. What I'm going to look for first is for a really good bullish engulfing pattern, right? So I'm looking for a really, really good bullish engulfing pattern. And I really want price, if anything, past this area, because I don't want to go against the trend at all, right? So I don't mind missing some pips, right? Waiting for price to really start making higher highs and higher lows on the 15-minute. If anything, I would like for price to, even though I'm going to miss out on a lot of pips, I care less. I really would like price to pass this area right there, right? I really would like price to really, really pass this area. I would miss out on, 60 pips, but it's like a guarantee. Hey, listen, price is going to go to this area right here, right? Which is still 100 pips, which is okay with me. Or you can go into a really low lot size right now and then get in, whatever you want to do. And then you can make your risk literally at the bottom of this. Literally right at the bottom of this, which is hardly anything. It's only about a 30 pip risk. Yeah, 30 pip risk, which is hardly anything. You know what I mean? But the upside is really, really grand. 170 pips. So 30 pip risk. Right? If anything here, let me actually draw it all out. So long position. So if anything, you can get in right now if you'd like. Right? Your entry price would be right now, which is this. Your take profit would be this area right here, 144.2. And your risk will be literally right under this area, because if it pushes down, whatever, right? If anything, let's do it a little lower, right? 142.3. 142.3. Right? So let's just say that you had, $1,000 balance, and you did, I don't know, let's do 5%. Let's do 10%. Right? 10%. So this is not really right at all. I really don't know why it does that. But anyways, your risk to reward ratio is 5.3, right? Which is great. Okay, so 5.33 to 1, which is not bad. If anything, I'm gonna get into that trade right now, because you never know. So I really would like to see something better. But if anything, I'm just going to get in at a really, really, really low lot size, because if it doesn't work out, you lost out on a little bit. But if it does work out, you're up big. All right, so that's the first one, and then from there, I'll wait for a breaker structure on the 15-minute chart to start hitting down. So no matter what, price has to push up, and then from there, I know for sure it's going to keep on going down, and then you just follow. All right, so hopefully, this helps you guys out, right? Not hopefully, I know for sure this helps you guys out. What I would definitely suggest, number 1, subscribe to the YouTube. Number 2, like this video on the YouTube. Number 3, comment on the YouTube, and then also on fxpronow.com. I'm going to post this up, if anything, probably tomorrow, right? Share this video with friends and family members, because I know for sure, this is going to help out a whole bunch of people. If you like this video, write to me what you liked about the video, because I need to know what to focus on. And if there's something that didn't really make sense, write to me. Hey, listen, I don't know if this makes sense too much, so I can be able to help you. If anything, I can be able to, respond to you, right? And then from there, I want to make sure that you guys know I'm gonna keep on pushing down. It's definitely going to keep on pushing down no matter what. Right? So just know that. Right? It's going to keep on pushing down. And from there, yeah, share this video, man, because I know for sure this is going to help out a lot of people. And so Tuesdays and Thursdays, we're going to be on our Zoom on fxpronow.com. And you can be able to invite your friends and family members to you can invite your friends and family members to check us out on here. Every Wednesday we're going to be doing a chart breakdown session, which is session number 3 chart breakdown. And if anything, you know, invite your friends as well. And if anything, we'll go on from there. You know, let's become fxpronow.com. Let's become fxpronow.com. Let's become fxpro now. And also, watch my entry prices right now. Watch my withdrawal video. I'm gonna be posting it up tomorrow. It's gonna be the detailed one. Watch that. It's pretty detailed, but I know for sure if you pay attention to the withdrawal video, right? You can find it on YouTube. If anything, I think it's on YouTube right now. Go to the YouTube FX Pro Now, and you can be able to find the withdrawal video. Find the withdrawal video, the detailed one, and watch that. Watch it, share it, use it. I'm going to be putting the actual. I'm going to be putting the actual. What do you call it? The actual. Excel file on fxpronow.com, and you can be able to download it from there, you know, completely for free for now. And what we're going to do is we're really going to make something major happen. You know what I mean? So I greatly appreciate your time, and you know, let's become FX Pro now. All right, let's get it.